7.5 billion US dollars in leverage have been wiped out during this week in the crypto markets. And it's all centered around what's going on with China, with Tesla and Elon Musk. And I think it tells us a lot about not only crypto, but the markets in general. So this video is in its nature a little bit more speculative than usually, I would say, but I'm going down through the events of the crypto markets, and with that I also give you my views of the role of China within this context. We have lots of FUD around crypto or Bitcoin and China banning mining and so on, but then try and reflect of what this means in the bigger picture of the current tech sell-off and also the macroeconomics. So the first article that came out 2 days ago, and I posted it in the Dongxi network, was about Chinese internet financing associations and Chinese banking associations publishing a warning about the crypto markets and basically reminding investors that it's a very speculative asset and that we should tighten and enforcing rules that are banning the trading of such assets. And my reaction was that this news is pure fear, uncertainty and doubt once again, because the fact that China is not welcoming bitcoins or other cryptocurrencies isn't news itself, right? And this news was just a reminder that this is a speculative asset and that, well, we need to protect retail investors and, well, people shouldn't be holding or trading Bitcoin. But that's dating back years. China has been against Bitcoin in general, but at the same time embracing blockchain technology. Even a President Xi, he's like really opportunistic on blockchain technology, and many even Chinese local governments are using blockchain technology. Now, this supposed new ban of Bitcoin mining caused Bitcoin to drop below the support zone on this day, and this additional fear around Bitcoin and a ban in China came right after Bitcoin actually already quite lost some steam and was weak here after Elon Musk famously coming out on Twitter and criticizing Bitcoin for its energy usage just weeks after Tesla was investing 1.5 billion in Bitcoin. And now Elon Musk supposedly got some news around a coal plant that is going onto the grid for mining Bitcoin, energy usage of Bitcoin spiking, and possibly also some investors in Tesla pressuring them because of the ESG rules. Now, it didn't stop here, because during this time that Bitcoin was already quite weak, we got even more intensified news around the Chinese ban. And this time it's not just some banking associations, but it's coming like from officials like Liu He, so that's really big and very top down. At the same time, we had more news that Hong Kong, for instance, wants to make crypto trading only possible for accredited investors and so on. So a lot of tightening of the rules and quite some big names here from China talking about banning Bitcoin mining. And as we know, most of the mining is actually happening in China. So what could happen if Bitcoin mining is being banned in China is that obviously the hash rate for Bitcoin is coming down. And we saw last time what happened when the hash rate went down. Also, Bitcoin was facing lots of selling pressure again. So in a nutshell, it was a week full of fear, uncertainty and doubt around Bitcoin from Elon Musk, but also from China and the Chinese government. So my take around the news of China is that first, well, the Bitcoin ban, once again, is nothing new, but now it's getting more severe in terms of the language there, and also that, these high-ranking politicians are talking about it, tells me one thing, and this is that the Chinese government is kind of, fearful around the speculation that's happening in this asset. And so I think it's more about the financial health and stability of China, and that's really resonating with how I think China works actually. So they can be quite opportunistic in terms of, if there's mining for Bitcoin, then we're gonna allow that. If people can make money by that, that's good. But we don't want our people to hold this asset or speculate with it, or at least we also don't want them to use it as a cryptocurrency because, well, of course, we're gonna introduce our own digital currency, right? So it's oftentimes that I see something like this in China. That's we have this kind of ambiguity. On the one hand side, it's kind of forbidden, but on the other hand, if there's an opportunity, then China can also be quite opportunistic around it. And so as somebody who's holding Bitcoin and Ethereum myself and watching what China is doing, I don't think that this means the end of Bitcoin. And I'm not really too worried about this news coming from China. And I think there is something, different behind it. So going forward, I could imagine that this was kind of a reminder of the government and officials to, don't get too much into speculation. We don't want to risk the healthiness of our financial system. As long as you're compliant with that, we won't see a big issue. On the other hand, if I think about the worst case, what's happening if we see crackdowns on Bitcoin mining and, for instance, the hash rate going down, I think that could actually even be a healthy outcome for Bitcoin, although I think it's the less likely case to happen. But what could happen is that Bitcoin mining will shift to other countries, because then there will be the incentive for other miners to ramp up their mining and, go where it actually can be also mined, maybe even with a cleaner energy usage. Although even in China, most of the Bitcoin is actually mined using hydrogen power and so on. So I would say this energy and environmental FUD is a different topic there. But just in thinking about what a Bitcoin mine would mean to China and Bitcoin and the world, I would say actually that's not a real point where we should be worried too much about. Instead, I have a different theory of, what's really the bigger picture behind it and what's going on. And that has to do, as I mentioned in the very beginning, that lots of leverage has been wiped out during the recent days. And this is where things get kind of crazy and also, it's going into a little bit of a conspiracy theory here. But there seems to be legit proof that somebody on this 4chan channel posted right before the first sell-off happened that, he is an anonymous person, and he said that there's gonna be an announcement by China soon, and they're using this news as a massive FUD posting to get Bitcoin as low as it can, and he even gave a timeline for it. And scrolling down the post, he even gave more timelines and accurate price targets that where Bitcoin will be going during the sell-off. So obviously this cannot be proven whether or not this source is legit, but this was posted exactly before things unfolded. He was naming the China FUD as that what's going to happen, and the Bitcoin price really exactly behaved like outlined in this post. And what got me thinking and suspicious around all of this is that if we look at the on-chain movement, that the coins have been brought onto the exchanges before the sell-off happened. Then we saw this massive sell-off, and then somebody bought the dip, and the coins have been taken off the exchanges again. And just during these days, lots of the long positions have been liquidated, and so people that have been on leverage have possibly been forced of selling out of their positions, and that has been more than 7 billion that have been lost in those positions. And there are theories about that this is an attack against Justin's son, so somebody wants to take him out as revenge or whatever. But certainly in my views, the latest events in Bitcoin and cryptocurrency shows me that it's more like some big money gambles going on there. It seems to be in a coordinated type of event. And I'm also not quite sure how it relates to the recent public comments by Elon Musk about Bitcoin and the energy usage, where I personally am in the views that Elon Musk, he will turn around in this discussion, and he will turn the discussion back towards more solution-based outcomes. Basically, I think there is a big opportunity for both Tesla and Bitcoin to kind of build a new energy system in which Bitcoin mining, solar, renewables, and Tesla with batteries and so on, and also the solar business can actually come up with a solution that Bitcoin mining is getting more decentralized, having a lower carbon footprint than it's actually already having, and thereby also Tesla still embracing the opportunity in Bitcoin. So despite all of these wild theories around Elon Musk and also the Chinese government, I think the bottom line here is that leverage has been wiped out. And this is something where it now comes back to where does it fit in the overall markets, and whether or not the Bitcoin bubble has just burst, and what this could also mean for technology stocks. So my take is, and I could be wrong here, that this hasn't been the top of the crypto markets. The fact that we see this kind of, I call it manipulation, or at least big players playing here and wiping out some leverage, shows me that it's more like some certain events that are going on right now. And what I haven't seen yet is this kind of the real buying into the hype, and that people are saying like, well, we're not gonna be in a bear market and so on. I think right now more people are actually talking about that not only technology stocks but also crypto is entering a bear market, and there's lots of fear around it, and that's not typically when I think that we see that we are actually topping out. Personally, what I see that we are seeing here, not only the crypto markets but also in the stock markets, is the unwinding of some sort of a liquidity crisis and also this leverage. And I was writing about this in my weekly Patreon post. Going into this week, I was asking the questions, are we in a liquidity crisis? Where I was writing on my take that, well, it all started with Wall Street bets in January and a GME and AMC frenzy, that some hedge funds really got into trouble and got squeezed because they were shorting these stocks, and that got almost into a kind of a systemic risk issue about liquidity, that these funds needed liquidity, and also sold off some of their other positions, many of those positions which were leveraged before. And I think we saw a domino effect in the system, whereby this Wall Street bet squeeze actually also resulted in that some over-leveraged funds, for instance from Bill Hwang, were capitulating. They had to, because some of their positions were just sold off by hedge funds, and in the end they had to meet the margin requirements. And so there is, I think, quite a big systemic risk right now, also with the prime brokers that are holding their different clients' portfolios, but they are distributed across accounts. And so we see kind of a vicious circle going on here, with some hedge funds that are shorting the growth stocks now, but also doing that on record leverage levels. And then I think still the Wall Street bets names like AMC and GMC are heavily shorted still, and I think maybe some of those hedge funds still haven't managed to kind of cover their positions yet. So in my views, we saw similar issues in the stock markets, and particularly growth stocks, around leverage, around liquidity issues. People, retail investors and hedge funds trading on margin, on leverage, and some of them being wiped out in the recent tech sell-off. And I think the same thing is happening in the crypto markets. Lots of retail investors, but also hedge funds, the fast and easy money went into crypto. We saw, like, for instance, how fast Ethereum and also other cryptocurrencies have been rising, and there was still kind of over leverage in the system that now has been gotten wiped out by these recent events, in my views. So both in the stock markets as well as in the crypto markets, I think this is kind of a healthy event, this kind of an unwind, and we need some of these players in order really to go bust, in order to have a healthy correction and to kind of, you know, coming back to the more healthy fundamentals. Because what we can actually see is also in the crypto markets that the long-term holders, and actually even some of the smaller wallets, for those, for instance, owning less than one Bitcoin and so on, these are actually the wallets that have not been selling off during this crypto correction right now. Instead, it's been like those wallets that have been only holding for a short period and kind of larger sums, for instance more than 100 BTC and so on. These are now, we can see that on chain in the metrics, they have now been selling off, and that might be new investors in the cryptocurrency world, financial investors, speculators that now had to liquidate their positions. They have maybe not thought through yet, entirely understood what cryptocurrency, what Bitcoin is all about. And so these are the weak hands. And now, similar to in the stock markets, we now see a transfer of shares, if you will, from those that are more speculative and on leverage to the strong hands, to the diamond hands, to the holders, to the long-term investors that have actually goals in mind and a better understanding of the underlying asset. And these thoughts about what's happening both in crypto and the stock markets actually led me through the thoughts during this week, which I posted here, that I actually have the theory right now that the markets are kind of ditching inflation fear. Think about it. We have seen a major rotation from growth stocks into value stocks because of inflation fear, and cryptocurrencies, or crypto in general, was holding up quite nicely actually. It really worked as a hedge against more speculative assets in the area of growth stocks. In my views, Bitcoin worked so far as an asset where people invest in if there is more fear about inflation. But now we are at a level where growth stocks are actually coming back down to, really the basis. And I see similar patterns like this all over the place, particularly in Chinese stocks, which have come back to previous ultra lows. And this is Huya. I don't have a position in this kind of stock, but it certainly lost everything that it had gained during this run up and is now at very ultra low levels, which kind of tells me that there's already been lots of risk taking out of the system, and at the same time valuations are getting more and more attractive again. And at the same time, I saw a trend in commodities, for instance lumber prices or crude oil, which kind of topped out and has actually some declines during that week. And this actually speaks for the argument that the rise in inflation and the fear around inflation that we've seen, and where this kind of stock rotation has its origins, might be actually just really be transitory, because maybe that is just mainly due to a supply shock, and therefore can actually unwind, like Cathie Wood mentioned before. So now we saw a big sell-off in one of our inflation hedges like cryptocurrencies. We see a reverse possibly in commodity pricings, and we have technology stocks, particularly the Chinese stocks in my views, at very, very low level. And at the same time, I was writing about this in my Patreon post again, really good numbers from China in terms of Baidu earnings. For instance, Tencent beat its earnings on the bottom line, I think an increase of 65% on the EPS. I commented around Xunlei XNet's earnings, which have been great also on the bottom line. So, the economic data of these companies is really fundamentally good and healthy, and at the same time those companies are sitting at quite low valuations. So this all in summary, with the deleveraging in both the stock markets and the cryptocurrencies, I think that tells me that's kind of a healthy situation right now. And we are sitting at levels where I am personally considering once again of adding to my positions. I've added to one position particularly this week, which my patrons already know about, but also in the area of cryptocurrencies. Currently actually considering on nibbling a little bit and adding to my Ethereum position, but in this case more of a kind of a speculative counterplay here, because Ethereum is more volatile than Bitcoin, for instance, and so I also expect the rebound to be harder if it happens. So yeah, that's kind of a way of thinking around it, that the volatility obviously both in the growth and tech stocks, on the downside you really don't want to be invested in those assets, but as a long-term investor, obviously if you can hold on to those positions, and if you're, for instance, not leveraged up, if you're not using margin on trading and you're not getting wiped out of your positions, then you possibly don't have to worry as much about it. And so certainly that's my views on this right now. I'm not so worried about what's happening in the cryptocurrency markets, and also getting more and more optimistic on the technology stocks again, and not really buying too much into this inflation fear anymore, because actually I'm thinking, seeing the first signs that this trade can actually be unwinding now, and maybe also the hedge funds and also the bigger market players are realizing that maybe that fear was kind of overdone, and maybe this could soonish actually result in a reversal of those trends. So yeah, really complex of what's going on. This is just my personal opinion. It's not investment advice. I'm telling you openly what I'm thinking, but please do let me know in the comments, what do you think is behind this crypto sell-off? What do you think is the role of the Chinese government, of Elon Musk? How do you think about technology stocks? Are we now at levels where it's time to get in again? Or do you think that this could be just the start of a bigger blow off, and then why so? Anyways, looking forward to make more in-depth videos then next on Baidu, on Xunlei, on NIO once again, of course. But these are my general thoughts about what happened this week, and that was obviously most about the cryptocurrency markets. So thank you guys, enjoy the weekend, and see you in the next one.